system will report higher cost of goods sold. Don't compute it. It's a simple step to compute it. But just looking at the two inventory amounts, which system or which one, LIFO or FIFO, which will report higher cost of goods sold?
LIFO.
No, LIFO, because higher cost, it means less money in.
Less inventory. Perfect. Since the ending inventory, remember the left hand side rule. The left hand side is the same, the 760. On the right hand side, there are two numbers, the ending inventory and cost of goods sold. The system which has the lower ending inventory must have the higher cost of goods sold, because they both need to add up to the same 760. So therefore, the cost of goods sold under LIFO is going to be higher cost of goods sold, and this is lower cost of goods sold, correct? Because higher inventory means lower cost of goods sold, and lower inventory means higher cost of goods sold. And we can easily verify it, because cost of goods sold under FIFO would be equal to $760 minus the $150 in ending inventory, which is equal to $610. And the same cost of goods sold under LIFO would be equal to 760 minus 100, or equal to $660. Right? So LIFO is going to report higher cost of goods sold, and FIFO will report the lower cost of goods sold. Now, if you're preparing your tax return, which would you like?
You want a lower.
On your tax return,
More money.
which system would you prefer on your tax return?
LIFO.
The higher one, no?
Because
you could declare more expenses later.
So the system which reports a higher cost of goods sold is preferable on your tax return, because you can show lower profits on your tax return, so therefore pay lower taxes.
And more.
Is that why it's not used in other countries?
No, it's got nothing to do with that. That is why it is used in the US. In the US, nobody wants to pay taxes.
Right.
And I always, I get a kick out of this. Every time I go and lecture in India, they think that I'm some kind of, I'm unpatriotic for trying to save income taxes. So I tell them that's the hallmark of the United States. In the United States, everybody hates taxes. So you got to understand that, yes, if you have a choice, if the IRS gives you a choice of either using LIFO or FIFO, there is nothing to feel guilty about using the system which reduces your tax liability.
And Indian people like to pay taxes?
Oh, yeah, they think that it is patriotic to pay taxes.
Yeah, but how much are the taxes in?
No, it's not like everybody in India, please don't think that I'm generalizing. But there is always somebody who says, oh no, how is that right? I said, it's right because you have a choice and you exercise the choice to make it, whatever is best for you. The only time when it is not right is when you don't have a choice and you exercise it. That's when it's not right. But as long as you have a choice to do it, in two ways, and you pick the way which is best for you, there's nothing wrong with it, absolutely. So the point about the LIFO, so let me get back to the LIFO. So therefore now, why is the LIFO very famous in the United States? It's because of the tax savings. And now remember, this is very important. The tax savings in this case happens why? Because the more recent purchase was at a higher price.
Right.
If the price system was different, let us say your beginning inventory was at 150, and you kept on buying at cheaper and cheaper prices. Now LIFO is not all that good, because now it's going to report a lot of profits. Why? Your cost of goods sold will be depressed, because the newer prices will go into cost of goods sold, and the newer prices are smaller than the older prices. So it is very important to understand that LIFO is good on the tax return only when there is inflation in the system. That is, the recent purchases are at a higher price compared to previous purchases. So if you have a gradual inflation, which is very common, it's natural to assume that the more recent purchases would